Hello and welcome to this very first video. In this series, I am going to teach you how to be an accountant. Not just how to book a journal entry, but literally how to be an accountant. We're going to create journal entries. We're going to follow that to the general ledger. We're going to see how that wraps up in the financial statements. And then for each of our balance sheet accounts, we're going to create schedules. So at the very end of this course, we'll be able to reconcile all our schedules to the general ledger. Now, the way that I have designed this is we are going to actually create a fictitious company. We are going to look at common transactions that a brand new company would typically expect to experience in their first year of operation. Second thing I've done is I've actually created an Excel workbook for this course. And this workbook is set up to actually simulate a piece of accounting software. It actually will have a tab where we'll book all our journal entries. It has a tab for the general ledger. It has a tab for each of the financial statements we're going to take a look at. And it has tabs for each of the schedules we're going to build out. So the first thing you'll need to do if you're considering taking this course is you'll need to go to my website where you can actually download this workbook for yourself, and I will put a link in the description of this video below. Once you have that, you are ready to begin. So stop the video and go take care of that. Now, I'm assuming you've done that, so let's get started. All right, I am looking at my computer screen now, and here we go. I've downloaded the files from the website and I've unzipped it. And you'll see there are two Excel files here. One's an answer key and one's a workbook. Don't open the answer key unless you get stuck, because I really want you to stick with the video course, and so we can learn together. So the one you're going to want to open is the Excel course, the Accounting Course 1 Workbook version 1. So I'm going to go ahead and open that now. And here we go. Here's the workbook. And again, I've set up this workbook to simulate an accounting system. So I'll give you a quick overview how it works. I have one tab that will be our journal entry tab. And in this tab, we will book all our journal entries for each of the different types of transactions that we're going to take a look at in this course. And I have all the transaction detail over here. Now, all of these journal entries will funnel into this tab, and you don't need to touch anything on this tab. Everything is formula driven. But you can see if you look in the cell, these are all sum ifs. So this tab will sum up all the journal entries on this tab. So this will help build us our general ledger. Then after that, the next three tabs are our financial statements. And again, you won't need to worry about these right away. We'll get into more detail on these towards the end of the course. But for now, you'll see that these financial statements are all formula driven as well. So everything is driven off our journal entries. That will funnel off into our general ledger, and then those general ledger accounts will get picked up by our financial statements. So as we are learning to book journal entries, we'll actually be able to see the impact it has on each one of these, meaning the general ledger and the financial statements. Then in addition to that, one thing that's super important in the accounting profession is that you keep good schedules, because at the end of every month, at the close of every year, you have to do reconciliations on each of your balance sheet accounts in your general ledger. So if you start with the journal entry tab and you look to the right, I have schedule templates for each of our balance sheet accounts that we are going to take a look at in this course. So with that said, that's kind of a quick summary view of how this workbook is created, and I think we are ready to start our very first journal entry. So let's go to the journal entry tab, and here we go, journal entry 1, and here's the transaction. I'll go ahead and zoom in so we can read it. Date, January 1st, 2020. Congratulations. You are starting your long anticipated entrepreneurship dream by launching a business that sells unique coffee mugs nationwide. You have decided to name the company Happy Mugs Incorporated. On day one, you have decided to invest $50,000 of your own money and transfer those funds from a personal checking account to a newly set up business checking account with National Bank. Okay, so let's talk about what's happening here. We're starting a brand new business. Businesses need capital. We are going to invest $50,000 of our own personal money into a business that's set up as its own legal entity with its own bank account. So we have our very first transaction that has occurred, and let's take a look at that. So the first thing that's important to know about journal entries, especially when you're working in an accounting system, is you need to make sure that the post date is correct. In this instance, this cash was transferred into the business on January 1, 2020. So our post date is going to be the date that that transaction occurred. And that's telling the accounting system to say, hey, look, this transaction occurred and it happened in the month of January. It's super important that we get our transactions booked in the correct month. So the first thing we'll do is we'll just go ahead and type in our post date, again, to simulate what working in an accounting system would be like. We're going to pick our account name. Now you'll see there's a drop down menu, and here's all our general ledger accounts that we can choose from. Now this list, this function list that's in this template, is actually pulling from the general ledger tab. So if you weren't sure, hey, which are my chart of accounts, and it's, you can't really, you don't want to really just scroll through here, you can go over here to general ledger and the general ledger tab, and you can see all the accounts that are available for us to book journal entries on. In addition to that, like one additional bonus that I did to kind of help people, especially beginners, is I've categorized all the accounts. So we have all our asset accounts, we have all our liability accounts, our equity accounts, revenue, and expenses. So let's go back to our journal entry, and now we need to pick an account. So this one should be fairly obvious that we're dealing with cash. We had, think of this, the business has 0 transactions. After this transaction, we now have $50,000 in cash. So we have cash and it increased. So I'm gonna go ahead and pick the cash account, and now we have a memo field. Every accounting software has a place to put a memo. It's super important to always put detailed memos in your journal entry. So, for now, I'll just put something simple, but it's as a general rule, as a best practice, as an accounting professional, is you want to put detailed memos in your transactions, especially for people when they come in to look at your work, or auditors, and they see this transaction and they want to know why you booked it or what's the reason. So it's important to have good memos all the time. So we're just going to get in the good habit of typing something. So I'll put capital contribution from owner. Okay. And now the question is it a debit or credit? If you've been studying accounting, this one's going to be super easy for you. If you're brand new, no problem. What I've done is at the very left of this workbook, there's a tab called Cheat Sheet. And this is going to be kind of a guide for you, especially if you're really new in booking journal entries. So we have cash. We know it's an asset because we saw on our general ledger, right? We have cash, it's an asset, and we know we went from 0 cash to $50,000. So we know it's increased. So an asset that increases is going to be a debit. So we'll come back to our journal entry tab and we'll type in the $50,000. And now you can see there's a formula right here that says we're out of balance. That's because every journal entry has to be in balance. That means all your debits has to equal all your credits, or you can't post it. So let's come over here to a new line in this journal entry. I'm going to just Control D to copy and paste. And then we need to select a new account. Well, what's the other side of an entry like this? So I kind of already given it away. If you see in the memo, it is a capital contribution, and you might be wondering how that's treated. A capital contribution is an equity account. So essentially, we're booking to equity. We put $50,000 in the company, and equity is basically the value of your company. So if we were to turn around and say, hey, we want to sell this company, well, the value of this company is, well, it's worth $50,000 because it's got $50,000 worth of capital sitting in it right now, right? So the other side of this is going to be equity. So we'll go ahead and pull in the capital contribution account. I'm just going to control D on my computer to copy and paste. You can type it in if you want. And we know the other side is going to be $50,000. Now, if you're brand new and you're like, well, in this situation, it's kind of obvious, but if it wasn't, what you could do is come to the cheat sheet, come up here, we have equity, and then equity can be broken out in these buckets. And so if we take a look at a contribution, here's a contribution, and we went from 0 contributions to $50,000 of contributions. Well, an increase in an equity account like this is going to be a credit. So let's go ahead and finish our journal entry now. $50,000. And here we go. This is our very first journal entry completed for this business and for this video series. Now, we're not going to stop there, because as accountants, we have to understand what's actually happening within our accounting software, especially in the general ledger, and how that impacts financial statements. So let's take a look at this. If we go over to our general ledger tab, we can see that our cash account right now is showing a balance of $50,000 debit. And if we come down to our equity account, our capital contributions is showing a $50,000 credit. Okay, all this is formula driven. You don't need to hand punch anything in. And if we summarize all our general ledger accounts, we'll see that they all net to 0. So it's super important to know that your general ledger will always net to 0. If it does not net to 0, you did something wrong. So in this case, everything's looking good. I even have a summation formula at the very bottom right here, and that's also showing 0. So that's good. The next thing is, let's take a look at our financial statements. We'll skip the equity statement for now. We're going to take a look at that in the very end of the course. But let's take a look at our income statement. Now you'll see there's nothing on the income statement, and that's because the income statement is only showing your revenues and expenses incurred. And since we've neither had any revenue or expenses so far, this should be 0. So that's correct. The next thing is our balance sheet. Now ignore these dates right here. I really put these in place for us when we close the books at the end of this video course. But if we were to generate a balance sheet immediately after this transaction, what we would see is this. If we look at our asset section, we would see that we have total assets of $50,000, all coming from cash. And if we come down to our liabilities and shareholders equity section, we would see we had no liabilities, and we have $50,000 equity, which is basically our capital contribution. And if we look at this, our total assets equals our total liabilities and stockholders equity, which satisfies the basic accounting equation. And we can see that right here again, which is assets equals liabilities and equity. So there we go. We've booked our very first journal entry. We've traced it through the general ledger, and we've seen how that wraps up into the financial statements. But we're not done, because really what I want to do is not just teach you how to book a journal entry and all that. I really want to show you what it's like to be an accounting professional and really get you to that high level of accounting. And in order to do that, we need to build schedules for all our balance sheet accounts. So if you come back over to the journal entry tab and you go over 1, I've set up a tab so we can start building out a cash schedule. So here we go. We're going to put in the date. This is just good practice in learning to be an accountant. And we'll put in the type. This was a contribution. This drop-down list is just pulling from over here. And then we'll put in a little memo, capital contribution owner, and we'll put in the amount $50,000. And here's our schedule. And I actually have this linked up to the general ledger right here. If you see the formula, and I just control left bracket, it's actually pulling from right there. So here we go. We have $50,000 schedule. It reconciles to the general ledger, and there you go. We've built this schedule. Now, the only thing we're not going to build a schedule for is our equity section. I'm going to wait to the very end of this series for us to actually put together our equity schedule together. But other than that, that's the end of the video. Congratulations if this is your first time. If you're a student or you're young in your accounting profession, also just congratulations on getting through this. If this was slow or easy to you, it should get progressively more challenging as we go through, but I encourage you to stick with this, and I look forward to seeing you in the next video. Thank you. Bye.